Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're going to do a quick midweek update. Now, before we jump in, if you enjoy this video or you learn something, all that I ask is that you leave a like or a thumbs up, as it really helps out my channel. And then, of course, if you want to get caught up to speed on the industry, I recommend subscribing so you don't miss any new videos. But for the best full-rounded education on where we were in the fall, what's happened over the election, and where we plan to be going forward, I'd recommend going to watch Reality Check Cannabis in 2020 and then watching episodes of This Week in Cannabis leading up until now, because a lot has changed in the last 3 months, pointing us towards Chuck Schumer, the new Senate Majority Leader of the now the Democratic Majority Senate, reiterating on live TV, being interviewed by Rachel Maddow. He lists cannabis as a priority in first post-election cannabis comments, which is fantastic because he's keeping his word that he said in August. Now, there was a video, unfortunately it came down, but I just want to point out that he said in October that he would move to put this cannabis descheduling bill on the floor if Democrats ended up winning enough seats in the election. But what he ended up saying in the interview as well, following up on what he intends to do, Schumer said that when it comes to cannabis reform, the issue intersects with both racial and economic justice, which it does. A young man arrested with a small amount of cannabis in his pocket, he has a criminal record for life, can't become a productive citizen. Yeah, that's not a good thing, and we do, again, yes, change that. We need to change that. So these comments come, though, as she prompts what are his top legislative priorities for the new year, and he listed climate change, then cannabis, on his riff about economic and racial inequality, before getting back to democracy and election reform. Those are the three stools. So again, we just got to be patient, and obviously there's a coronavirus situation, there's a lot going on, but we have to trust and look at the people in charge, worry less about the day-to-day share prices. But the good news is that this article literally came out on Saturday, the day after Arizona legalized, and Valley dispensaries see long times on second day of recreational sales, which is fantastic. What we want to see. Some stood in line for an hour or more, but we're happy to wait since it was their first time purchasing recreational cannabis from a dispensary. It's a very exciting thing. Like if you grew up in a country where it's illegal for your whole life and then it becomes legal, like that's an interesting experience. That is something people want to take part in, and that, again, legal access as opposed to black market, more people will jump in and end up buying legally than you'd be intended to believe. Now, Curaleaf, a national medical cannabis dispensary, again, one of the many MSOs, that's actually the biggest, they mentioned they've seen nearly 3,000 people walk through the doors since Friday, and this article came out on Saturday. So again, look at these lines of people. Folks, you can't say the demand is not there. I cannot wait for that law change. And then all of a sudden it's like, oh wait, we don't think of cannabis as a bad thing anymore? And then the big money can finally get in? Oh, amazing. And we actually got some news out of France already. They've chosen companies to supply their free medical cannabis for their trial program. So the French Agency for the Safety of Medicines and Health Products selected the companies that will supply France's medical cannabis pilot program that is intended to provide free products to patients enrolled in the trial. Now get this though, it will provide products for up to 3,000 patients, and these companies chosen will not receive any money for supplying the medical cannabis. Now, that seems a bit strange, but I just want to point out that, this is more of a marketing play. If you can get your brand that's a quality and good brand into another country and well known there, if you're a cannabis company in a good position, you would be willing to do this for free because it's again getting your brand out there. It's the awareness and the marketing in the European market. But so I just want to point out, so UK-based company EMAC Life Science, they were chosen. Panaxia was chosen. Alphia from Australia and Little Green Pharma. These other smaller companies were chosen. But out of Canada, the two based out of Canada were Aurora Cannabis and Tilray, which, keep in mind, Aphria and Tilray are still set to merge in Q2 at some point. So this for Tilray is a win for Aphria. And of course, if the merger doesn't go through, then it's still a win for Tilray. But I'm just going to point out why I think this is interesting, because you've got two companies here. One that is not growing as much, unfortunately, with Aurora Cannabis, and I'll show what I mean by that. But you've got a company that's not growing, willing to supply cannabis for free. So Aurora is not making money out of this. Keep that in mind. This is a free test run. Whereas Tilray, if they become Aphria like they plan to, they are in fine shape in terms of revenue and balance sheet and seeing growth in Canada. So this is a massive upside for Tilray, and I mean, hopefully Aphria, which will become them. And just to jump ahead, I want to point out to this reference that, or this resource, someone pulled OCS data and made it themselves. So again, don't take this as true face value, but it's as close to representation as we can get. And as someone that's been watching the industry for a long time, this does look fairly accurate. But if you look at a company, you just want to make sure that if you're investing in any sort of company and putting your money in it, you want to see them growing their revenue quarter over quarter. If they're not growing quarter over quarter, you don't want to be invested because they're not going to grow themselves. And so if you look, Aphria is clearly the leader growing their market share, but Aurora, they have not been growing. So like they'll really need to step up their game in Canada and elsewhere in order to like for this France deal and the fact that they're kind of just giving away bud. Again, it's a brand play. But just wanted to point that out that like if we look through Redecan, a private company growing their market share, Canopy struggled at the beginning, but they are now growing their share. Pure Sun Farms growing their share. Organigram struggled at the beginning and unfortunately has not grown since. Hexo is slowly but surely growing. But look at Tilray down here. 3.9, 3.6, 3.8, 3.3. Tilray is not growing. And so that is why, like, again, Tilray needs Aphria. And that's why the merger does make sense in the long run. Aphria gets Tilray's European footprint plus their US like base, and then Tilray gets Aphria's great brands and balance sheet. But so yeah, just wanted to point that out though, is like when a company is not growing quarter over quarter, they should be looking for other revenue sources. And the fact that Aurora is doing this, it's a bit risky because they, although it's good to supply France for this pilot program, you also need to make revenue for your shareholders. That's how companies work. So all the details are down here if you want to take a look at what how many seats they got. But yeah, Aurora got 3 lots and then 2 lots as main supplier, 2 lots as a substitute. And this brings me to Canadian sales. They have come out for November, and we actually did see a decrease in the momentum for the first time. Is that something to be worried about? I don't think so. And again, although more stores were opening, it's been a difficult year, and you know, for most industries, yet this year is showing strong growth. So again, it's not something to be necessarily worried about. We see Ontario still almost did what they did in October. Quebec dropped a little bit. Quebec really needs to open more stores. Alberta, again, the momentum didn't keep up, but again, I don't think this is a bad thing. And if you compare Canada's 2019 sales of 1.2 billion, as of right now, the end of November, Canada's sales are at $2,325,908,000. So if Canada can put up $275 million in December, that will put Canada's total sales at $2.6 billion for 2020. So think about that though. 2019, $1.2 billion. 2020, $2.6 billion. That's a big increase. And I just want to give you that information and then show you that how Canada is pretty much California. 1.4 in 2018, 2.8 in 2019, and then in 2020, 4.4. So this is an older article from last week in Cannabis, but I just wanted to show you that there's a lot of similarities between the Canadian market with 37 million and the California market with 39 million people. And I don't think Canada is going to get up to 4.8 billion, but hopefully they can get up to 3.3 billion or 4 billion in 2021, as again, Ontario opens 80 stores a month. And I just wanted to show this for reference, but this is also why, like, you want to be in, you know, the top growing companies in Canada. Otherwise, your money is going to grow a lot faster in the next few years invested in US multi-state operators that have a footprint in either all of these states or, again, New Jersey, Arizona, New York, these upcoming states, Illinois. That's where the growth is going to come. So this reference will be, this source story will be down here for reference. And then the dark side, though, the reality of what is happening in Canada is that there is 1 billion grams of unsold cannabis apparently sitting in warehouses, according to Health Canada. And so, yes, when you are the first country to do this and the government has very tight regulations, there are going to be mistakes and there are going to be, bottlenecks in the supply. And so I just wanted to point out, though, that it's interesting is that, you know, some of the companies on here, the Valens, Alifia, what you see is these companies that are talking to Bloomberg is that there's some of the smaller companies. Now, of course, you see Valens growing, which is nice, but it's going to be so difficult for some of these smaller companies to keep up with any of these big companies that have really established themselves and are eating up the market share, right? So that's just why the Canadian market, getting into some of these small cap penny stocks just seems insanely risky to me. But again, that's just my opinion, and I just want to share what I know so that you can compare it with what you know, and then make the best decisions for yourself. But to point out, there is a little bit of potential wildcard down here. Health Canada's upcoming ruling on whether they will allow CBD, the non-impairing chemical compound found in cannabis, to be an ingredient used for over-the-counter health and wellness products. A formal decision is expected to happen in Canada later this year. But the thing is, no one knows how much of that 1 billion grams is in CBD. If it's in THC, they're going to need to find different ways to use it. And that is why, though, in the markets, we have flower, which is the plant itself, but then you've got vapes, you've got edibles, you've got pre-rolled joints, you've got topicals, you've got concentrates, you've got all these different things. So yes, these companies will have to be innovative. And so I wanted to point out, Freya has included their adult use brand Soleil. They introduce a high potency topical. So this is like a type of cream that you can put on pain. Very interesting, but again, it's a way to get rid of the cannabis you have built up in stock and use it in some new products that are allowed. So, of course, top companies need to be innovating like this. And we've also got Canopy announcing, big push with CBD and Martha Stewart, trying to target the boomer audience, but then also with pets. Again, this is just a very creative way for Canopy to use some of their cannabis that they've built up and get it out into new markets. So they've got Martha Stewart's CBD for Pet line, features science-backed government-flavored CBD soft chews and oil drops for dogs, and carries the National Animal Supplement Council quality seal, I believe. So again, it's just interesting. You've got to see these market leaders figuring out creative ways to sell the excess cannabis that they've built up. But what I do want to point out is that these US multi-state operators have really had an advantage watching Canada kind of go through this so that they could, take the best of what we did and apply it to their own companies. And the last thing is that Canopy has reported that their Q3 fiscal financials will come out on February 9th. So we do at least have this to look forward to in the next few weeks. Canopy releasing earnings, and US MSOs should be releasing their earnings at some point. Now, lastly, I do want to jump in here because this is an old article I found written by Todd Harrison, one of the investors following cannabis that's very vocal on Twitter that I've been getting a lot of my information from, because this guy has a lot of experience in the investment industry, and then he kind of decided to be a lone wolf and go for cannabis in himself. Now, I don't have time I don't want to go all through all of this, but just how cannabis could be a $1 trillion industry in 10 years. I do think this is the perfect storm. Again, time versus policy. Finding out that there's an endocannabinoid system in our bodies that sort of acts like cannabis to put our body in what's called homeostasis, in balance. And then ultimately price versus institutional demand. If we just think about the timing and the policy, like states need cannabis, or they need jobs, they need tax revenue, they need all of this stuff. Price and institutional demand, investors want to put their money somewhere that's undervalued, and it looks like everything else is overvalued except potentially for cannabis. The perception, again, when reality and perception, so what people think is real and then what's actually real, are so out of whack, that's also a possibility. Liquidity too is just the amount of cash. But what he generally says out of this, I just wanted to try and point out a few things. But I would encourage you to read this, because once people get past seeing cannabis as something that gets you stoned, and they start to view cannabis as, well, once we find out more scientific and therapeutic benefits for what THC and CBD actually does to the body, and we found a ton about CBD already, THC just needs more funding. But once you get past the stoned part, and you can add THC and CBD to drinks that you get at bars and all these different things, like this just expands and literally gives the ability for cannabis to grow exponentially, similar to tech companies. And so that's just why I would encourage you to read this article, because it does kind of get into the fact that this is the perfect storm, and this is going to be a lot bigger than I even believe, which is why I just want to point out, we're going to look at tech. This is QQQ. Invesco QQQ Trust Series is the biggest ETF that invests in all the big tech companies. Okay, so one day you can see it's down. Oh no! But Max, it started at $52 in 1999. Obviously, there was the tech bubble and then came all the way back up. So obviously, it would have been very difficult for you to hold through all this time because you're not making money. There's a ton of opportunity cost. But then, cha-ching, it climbs. And I just want to point out that MSOS, which is the same ETF, but instead in the top US cannabis companies, multi-state operators, it only started in September at $23.77. And it's almost doubled since then, and we're seeing a bit of a pullback, but I don't see any reason not to think that MSOS is not going to be like QQQ, but starting right here almost, as opposed to starting all the way back here, okay? And why do I say that? Well, this brings me to my final point, because I was doing some research yesterday, and here we have Zoom, as of close yesterday, and we've got Curaleaf, the biggest MSO, so I wanted to use Curaleaf as the example. And we're going to look at their 2018, 2019, and 2020 revenue numbers. So for Zoom, in 2018, they did $151 million in revenue. 2019, they did $330 million in revenue. And in 2020, for their entire fiscal year 2020, they brought in $622 million in revenue with an operating income of $12 million. Fairly good. Good for you, Zoom, especially during a pandemic when people use your product more and people are expecting more demand for it. Now let me show you Curaleaf though, because in 2018, Curaleaf made $77 million, about half of what Zoom made. But keep in mind, they're in legal states, while the federal law is still against them and the stigma is still there. By 2019, they didn't just double like Zoom did, they tripled their 2018 numbers. And then this is what I need to point out is that as of right now, Curaleaf is in their 2020 fiscal year. So their 12 trailing month average includes Q3 and Q4 of 2019, and then Q1 and Q2 of current year 2020. And what that means though is that Curaleaf is going to report Q3 in February or March, and then in the summer they'll report Q4, and that will be their fiscal year 2020. But as you can see right now, 2 quarters in, they're already on pace to make a lot more revenue than Zoom, and they're going to. And as you can see already, their operating income is already $35 million. They're already profitable, at least not profitable. They're making positive operating income more than Zoom is already. So I just want to point this out because look, I know it's hard to compare cannabis and tech, but we know that tech companies trade with a ton of future growth baked into the price, right? People are, but like think about the future growth. I'm telling you, these cannabis companies are trading at a book value. There's no future growth inside, and that is why this is so shocking. Zoom trading at a PE ratio of 260, valued at $1.9 billion. Yet they only brought in $622 million in revenue in 2020. While Curaleaf, the biggest MSO of all, and again, of course, on pace to do the most in revenue, they're only valued at $9 billion. So again, just level with me here. Either Zoom is insanely overvalued and Curaleaf is insanely overvalued, or I'm just wrong. But I don't think so. And I think it would almost be fair to see like Zoom could fall from $110 billion down to $50 billion and be, fairly valued, whereas Curaleaf could rise from $9 billion to $50 billion and also be relatively fairly valued based on the current growth we're seeing out of them. So I just wanted to point that out. Let me know if you have any comments below, because I find this fascinating, and I want to know if you think the same thing. Like, once US legalizes cannabis, do you not see that a lot of money that's invested in Zoom and these very overvalued stocks might rush into cannabis because they're so undervalued compared? That's really what I think. And I just want to round this off with Todd one more time. He's again the man that wrote this article, Todd Harrison. And I just see him as a bit of a rogue investor because he's doing his own thing. And I mean, I saw the same thing he did, and yes, it's coming to fruition. But look, he says, and again, he's someone that probably knows more people in the industry than I do. Heard whispers that the SAFE may be pushed to 2H21 as COVID 2019 impeachment trade ahead. So this is the focus of government right now, but checked with someone else who said that the SAFE should be in a March or April COVID relief bill. So that is huge. Again, and I just want to leave it off with what he says. Either way, we don't know, but I'm focused like he is on the fundamentals of the companies, the fundamentals of an undervalued company, and we just have to trust that the rest will take care of itself. So in that sense, we are just waiting for the Safe Banking Act to pass, and then the U.S. government to eventually pass the MORE Act and legalize, and that's where I would see the opportunity really piling in. And again, just the suggestion, not advice, that it's better to get in now before big money can get in. And that is it for this episode, folks. So if you enjoyed this and you learned something, please leave a thumbs up on the video, subscribe if you want to see more, and I will catch you on Sunday for This Week in Cannabis. Have a great day, everybody.